Welcome everyone to the GHG Accounting 101 webinar, where we're going to take you through the introduction to measuring and managing GHG emissions and the main concepts around GHG accounting. We have this webinar recorded, so once we have finished the webinar in a few days, you can actually find the recording on our website. If you have any questions, you can always come back to us later on. What we have done is we've allocated questions or time for questions at the end of the session, so we have about 10 to 15 minutes for the questions. Keep sending the questions over to us. Me and Lorinda are going to be collecting the questions. So whenever you have questions in between while we are presenting, please send them through chat to both me and Lorinda, and we're going to collect those questions and address them at the end of the session. So that's how it's going to work. Like I said, it's going to be a session will be recorded. You can have access to that later on. And overall, it's a session of 1 hour and 15 minutes. So that's how we're going to kind of take you through the session today. A little bit about ourselves, who we are. My name is Shivani Rajpal. I'm the CEO of Earth Academy. Over the last 17 to 18 years, I've helped many companies and governments with capacity building on sustainability. Before Earth Academy, I worked at GRI for 12 years, where I was the Director of Training and Services. I've helped many organizations and governments with implementation of sustainability standards, and I'm an expert in standards like GRI, IFRS, TCFD, and CSRD, and many more that keep on coming and popping up. I'm very, very happy to take you through this session with my colleagues, Lorinda Niemeyer and Juliette Gaussem. I'm going to hand it over to Lorinda Niemeyer for her quick introduction, and I'm going to explain to you what's the role that Juliette is playing in our webinar today. Over to you, Lorinda.
Great. Thanks, Shivani. Good morning, good afternoon, good evening, everyone. I'm Lorinda Niemeyer. I'm a partner here at Earth Academy. Like Shivani, have a long history in the world of sustainability, first as a regulator, then as a consultant, and now as head of sustainability for a large financial institution. So I try to bring those multiple perspectives from having multiple seats at the table into our classes and into our courses. So excited to talk to you about GHG accounting over the next hour or so.
Wonderful. That's great. Thank you so much, Lorinda. And Juliet has joined us as a guest speaker, and she's going to have a presentation after we both have presented the concepts and talk about how her organization is implementing GHG accounting. So I'm going to have her present herself and do her introduction in a little bit. So just bear with us and let us take you through the few concepts first in the beginning, and then we'll hand it over to Juliet in a moment. So with that, let's start with the why. Why are we here? Well, we've seen the effects of climate change. We've seen how it has impacted all of us. So climate action has actually never been more critical than before. Now, we can't control what we don't measure, and so we do need accurate and meaningful information, meaningful data on GHG accounting, which is the first and foremost step in effective climate action. And that is the role of what GHG accounting plays in the overall climate action. It actually helps us in knowing where to look for the emissions. It requires us it requires, and that requires the knowledge of where the emissions come from and how do we actually capture them and credibly capture them. And finally, how do the efforts that we put in managing all those emissions, how are those efforts? Are they actually good? Are they working? How can we reduce emissions? So that's kind of really the role of GHG accounting. And we're going to break these concepts over to you at an introductory level today in this webinar to help you in understanding the critical role it plays. So with that, I want to kind of quickly show you this particular slide where we talk about how the future depends on the choices that we make today. If we continue emitting similar to how we've been in the past, it would actually lead to worsening climate effects, which would have a huge risk to businesses and to society. And because greenhouse gases, GHGs as we call them, they stay in the atmosphere for such a long time, we are experiencing currently the effects from the choices that we've made in the past. And similarly, the choices that we're going to make today are going to affect us for a very, very long time. Now we see with this red line that we see in the graph that if we keep emitting at a business as usual rate, we could see global warming increase to 4 degree or more by the end of the century. Now, if you look at 4 degree in isolation, it may not seem a lot, but the previous ice ages were marked by the temperature changes of 4 to 6 degree. And that happened over tens of thousands of years. So you can see 4 degrees in such a short time would be really, really devastating. Right now, we're sitting at about 1.1 degree of warming over the last 100 years. So that has happened very, very quickly. 1.1 degree has reached already in the last 100 years. This is what we see with the stripes that you see on the slide. Now, to avoid the worst outcomes of climate change, we need to limit global warming to 1.5 degree by the end of century. And that is what the countries together agreed as part of the Paris Agreement. And what it requires cutting emissions in half by 2030 and not emitting any net new greenhouse gases, what we call it as coming to a state of net zero by 2050. So really, it's not going to be an exaggeration to say the future really depends on the choices that we make today, and we really have to consciously make those choices. So with that, I think we can, with kind of that note, let's just come to the reality of what's happening today, which sectors are playing what type of role. We have a poll today. We have a couple of polls, so we kind of keep you engaged in that as well. This is just a warm up to check. We're going to show you a list of 4 sectors, and we ask you from the 4 sectors that you would see in just a moment, which of the 2 sectors do you think produce the most greenhouse gases? So let's have the poll now for you to kind of make the choice. It's 2 sectors, so it's a multiple choice. You can keep kind of including your choices here. And I can see people have already started responding. Great, wonderful. We have some mixed responses. I'm excited to take you through the next slide as well to explain a little bit further. Wow, we do have a lot of answers already. Wonderful. Just to kind of keep an eye on the time, I'm going to end the poll over here. The poll really basically says that you all have, I'm going to quickly share the results just to show you how it looks at the moment. 61% of you said that it's agriculture and land use, and 60% said energy use in transportation. And 44%, so a huge chunk, also said energy use in buildings, and a few people said waste as well. So the correct answer is, out of these options, it was energy use in buildings and agriculture and land use. So I'm going to quickly show you the next slide, where I want to show how all sectors have a role to play. So all of you, thank you so much for your interactivity and sending the responses. But you were all right. All of the sectors have a huge role to play in the transition. You can see the energy part of it, and energy has a big role over here. You can see that energy production has a huge role. You can see energy use has a big role. Energy use in industry, in buildings, in transportation has a huge role as well. And you can see what a big role agriculture, forestry, and land use also plays as a sector. So you can see so many different sectors have a huge role to play. They have a big footprint in the overall emissions that they make. But without fundamental changes in actually addressing those emissions, we cannot get there from where we are at the moment. We cannot get to a low carbon economy. So really, everyone has to come together and play a role in this. And that's where GHG accounting actually comes, and it really matters from that perspective. As I already kind of explained, it's the first step. It's a very critical step to climate action, and the reasons are very, very clear. It basically helps us in identifying reduction opportunities by measuring what you can manage. It basically pinpoints the emission hotspots. It tells you across your operations and across value chains what are the areas that are high emitting areas, and how you can actually, after identifying those, how you can use materiality again to enable targeted reduction strategies. So the biggest emissions, how you can actually target reduction strategies for that. Secondly, it builds stakeholder confidence. When you have transparent emissions reporting through your GHG accounting, you're able to, as a company, build trust with your several stakeholders like your investors who are always looking for this information, your customers, your employees, etc. And very importantly, it helps with regulatory compliance. We have seen a huge increase in stringent climate disclosure requirements. If you see the IFRS standard that has been integrated into several jurisdictions, it has a dedicated standard S2 on climate that organizations are expected to use and put their climate disclosures according to that. If you look at the European Sustainability Reporting Standards, there is a dedicated climate change standard as E1 also included over there. So by putting together your GHG accounting and having that in place, you're also really adhering to regulatory compliance that's increasing every year. And finally, risk management. By doing GHG accounting, it helps you in identifying not just your risks, but also your opportunities. And that helps in protecting your business resilience and creating long-term value for the organization. So overall, GHG accounting is quite important and also very critical for the organization to put together. Now, how do you do that? For GHG accounting, GHG Protocol is the leading approach, and organizations around the world, governments around the world, are actually using the GHG Protocol. Now, GHG Protocol has a corporate standard as well as it has guidance and disclosures on Scope 2 and Scope 3 emissions as well. So again, like I said, organizations worldwide use the GHG Protocol to understand their emissions and to measure and manage those emissions. Even for that matter, the bigger standards like IFRS, like GRI, like CSRD, they have referenced GHG Protocol within themselves to actually go back and use the guidance from that. So that's the most kind of common way of handling this. Now, GHG Protocol is being updated at this point in time, and there would be new releases that are expected in 2025 to 2026. So keep an eye on that. But the way they are at this point in time, they're absolutely usable for the organizations, and that's what organizations are currently using as well. Now, before we go too far into into GHG accounting and the steps to take for that, just taking a step back to understand a few concepts that are super fundamental to understand to the next steps for GHG accounting. So we keep hearing these terms, and I just want to kind of take a moment and explain these terms from the perspective of GHG accounting. So you always hear this term greenhouse gases, or in short, GHGs. What are those? These are several gases that absorb infrared radiation and they cause Earth to warm. There are different greenhouse gases, particularly 7 greenhouse gases that are integrated in the GHG protocol as well, and that's what we're going to be referring to. And these different GHG gases, they have different properties, they have different potency levels, and they affect on warming in a different way as well. Then we hear the term emissions. For our purposes, whenever we hear the word emissions, it's about the greenhouse gases that are released into the atmosphere based on the different activities and the different sources of the organizations. That's what organizations put as their overall emissions and integrate in their reporting as well. And that's what several stakeholders are interested in understanding as well for the organizations. Then we hear the term global warming. This is warming of the Earth's atmosphere because of how the GHGs accumulate and stay in the atmosphere and the changes they actually make to the energy balance while they trap heat. And that's what creates global warming or affects global warming. Then we have terminology like carbon dioxide, but not just that, we also talk about CO2 equivalent, carbon dioxide equivalent. So CO2 is the most common greenhouse gas, and that's what we use as a standard for measuring our global warming potential. But different gases, like I said, there are 7 gases, they all have different global warming potential, and we basically compare that with carbon dioxide and put a CO2 equivalent of those gases to combine the emissions of the organization, to accumulate and to provide the cumulative value of the CO2 equivalent for the organizations. And then finally, when we use emissions scopes, there are 3 scopes, scope 1, scope 2, and scope 3 of the emissions. There are these 3 categories that the organizations use to classify where their GHGs are coming from. And I'm going to come to that in just a moment, but these are the terminologies that are super important and needed for you to understand before we go into GHG accounting any further. So with that, these are the 7 different gases. CO2 is, of course, the main gas, but we do not just talk about CO2, we talk about the other gases as well. And we bring those gases to the CO2 equivalent, which I'm going to talk in just a moment as well. But just to take a step back as well, different gases come from different sources of the companies as well. So you need to kind of understand your sources and what your company's activities are, and based on that, what are the different sources and which types of greenhouse gases does your company emit. So CO2, carbon dioxide, is emitted by burning fossil fuels or through chemical reactions or through agriculture. Whereas methane is through livestock and agriculture as well as production of natural gas, for example. Nitrous oxide is a gas that again comes from burning of fossil fuels, but also through land use and fertilizer use, so industrial use essentially. Then we have the combination of hydrochlorofluorocarbons and perfluorocarbons, which are because of solvents, because of refrigerants and propellants. And then we have sulfur hexafluoride, which is kind of a part of electrical equipments as well. And then nitrogen trifluoride, which comes from semiconductor development, electronics, manufacturing, etc. So when you see your solar panels developed, that's what it needs. So these are the different gases, like I said, different potency level, and this is what we see and mean by the global warming potential. So different gases have different global warming potential, starting with carbon dioxide, which sits at 1. And then we compare all the gases and the GWPs, the global warming potential of these gases, compared to CO2 and provide the CO2 equivalent. So if you look at carbon dioxide, comparing carbon dioxide with methane, methane is 28 times more potent than carbon dioxide. Comparing that with sulfur hexafluoride, it's 24,000 plus more potent than carbon dioxide. So really, for organizations, it's super important to take a step back and to understand what their activities are, what the sources of emissions are, what are the different gases that they are actually emitting, and how are they going to manage those. And to be able to then put together the cumulative number of cumulative emission number, you would have to convert these gases into carbon dioxide equivalent to basically say what that emission number is. So that's how it works. And here I have this was more at a concept level. And just to check your understanding, we have another poll where we ask you, if you were to trade methane emissions with carbon dioxide in equal amounts, what do you think, what would happen to your overall emissions? Would it likely increase? Would it decrease, or would it stay the same? And just for your reference, we've put the GWP values of the different gases over here. So you're looking at trading methane emissions with carbon dioxide in equal amounts in tons. What would it do to your overall emissions? Can we have the poll, please? So would it increase your overall emissions, decrease it, or would it have it stay the same? What we are doing is we are trading methane emissions with carbon dioxide. We were emitting more methane. Now we are going to exchange that with carbon dioxide. Okay. I'm receiving many responses over here. Okay, I'm going to end the poll now. Thank you so much for your participation. I have some mixed responses over here from increase and decrease, and maybe the wording of the question or the concept itself, whatever it is, let's just see the result. So the correct answer is it's going to decrease the overall GHG or the overall emissions. And why? Because CO2 has lower GWP than that of methane. If you look at carbon dioxide, it's 1 and methane has 28, meaning that if you were emitting methane before, now if you're exchanging that activity to emit carbon dioxide, but an equal amount, it would be 28 times less emissions. So that's kind of really the idea of how you look at the calculation, how you make decisions on what changes you're going to make within the organization to have lower overall emissions as well. So really you need to understand which gas is emitted at what level and how the company is actually managing those and creating solutions for the organization. So with that, let's look at where do these emissions come from. These are different scopes. So scopes meaning classifying where the emissions come from, and these scopes are scope 1, scope 2, and scope 3. So scope 1 is all about your direct emissions, emissions from the company facilities, from company vehicles, for example. These are all scope 1. Scope 2 would be all your indirect emissions related to your purchased electricity, your purchased steam, your purchased heating, and your purchased cooling that you use for your own purposes, for your own operations. And scope 3 would be all the indirect emissions that are not included in scope 2 that would then be included in scope 3. And scope 3 has several categories, particularly 15 categories that it comes under, and it comes from all your upstream activities as well as your downstream activities as well. So organizations really have to see all across their value chain and within their own operations where the emissions are coming from, and then categorize them into scope 1, scope 2, and scope 3 emissions. So that's what I wanted to kind of share in the slides so far to kind of take you until what are the different scopes and how you actually look at the sources, etc. And I'm going to hand it over now to Lorinda to take you through the process or the core steps of the process of GHG accounting.
Great. Thanks, Shivani. So we just talked a bit around sort of the why behind GHG accounting, some of the core concepts you have to be familiar with. I'm going to start taking us through the how, and we're going to put some of these concepts into motion and bring them to life a little bit. So hopefully, rather than just being a jumble of abstract concepts, we're going to see how they start to work and see how the process helps us to define these a little more. So there's a lot that goes into GHG accounting. Into building an inventory is what it's called. But we've actually broken those down into 4 broad high-level steps, and I'm going to take us through them quite quickly. But we're going to focus a bit more on step 3. But it's hard to go straight to calculations and accounting without setting the context around this concept called boundaries. So step 1 and step 2 are all about boundaries for GHG accounting, organizational and operational. I'll walk through that in just a moment. Then we'll spend a bit of time talking about how we actually calculate the emissions themselves. We're going to use the concept of activities and emissions factors, which you might have heard. That's how we'll bring that to life. And then part 4 is all about how we track and report over time. So we'll talk about concepts like a base year and whether or not we need to recalculate and when. And again, we'll touch on them really quickly, but we just want you to have a sense of how these pieces all come together. So let's start with this idea of boundaries. So just like with sustainability reporting, just like with financial reporting, we need to have a way to kind of carve out and say, this reporting covers this concept of an organization, these boundaries of an organization. And that's this first step of what we call organizational boundaries. So which business units, which assets, which operations, which ones are going to be included in the four corners of your inventory? We call this consolidation, just like we call it consolidation in financial reporting. Which groups are going to be part of the broad number that we give you for a company in its organizational boundary? I'm going to talk about that really quickly and the methods that companies can use to do that. And then we'll get to the idea of operational, which is all around how we classify the emissions into those scopes that Shivani talked about. But we can't talk about that until we talk about, well, when I'm company A, which parts of my business am I going to include in my inventory? And there's two ways that companies can make this decision. So they can either do them through the areas that they control, and there's two flavors here, or where they have a financial interest, and that's this idea of equity share. So from a controlled approach, companies can say, okay, we're going to include in our GHG inventory the business units, assets, what have you, based on control, either through areas that we control operationally, so we can implement operating policies, or financially, so we can direct financial policy so that we gain economic benefits. Depending on which of these a company chooses, if they choose the operational control boundary, if they have the authority to introduce and implement operating policies, doesn't mean they control every decision, but they can introduce policies around things like production process, let's say, health and safety, let's say, right? Those types of decisions. If the answer to that is yes, and they're using that boundary, then they would include 100% of the emissions from those subunits in their inventory, right? It's an all or nothing here when we talk about operational control. That's the most common approach that most companies take, and that's the one that you'll probably hear about most often. But what if you're a large holding company, for example? You don't control all of the operations of your subsidiaries, they operate somewhat independently, but there are financial policies that run throughout your organization. In that case, you might choose a financial control approach because you gain the economic benefits, but you don't control the operations. This is the next most common approach. If this is the approach that you've taken and the answer to that question is yes, then you would include that in your boundary. The last one is less about control and more about the economic interest. So there are some companies that have very complex structures. Think about oil and gas companies that have a lot of joint ventures, a lot of partnerships. They don't control those operationally. They don't set the financial policies necessarily, but they have an economic interest. In this case, you include in the boundary, if that's your chosen method, the percent of equity that you own in those organizations. So we can go when we do this in a longer time frame, we actually go into a lot more detail here. If you take nothing else away, we won't go worry too much about some of these pieces, but just know that the choice that you make, it matters because you don't switch this up with every inventory. These are the choices that you make up front that actually include what's in or out, and they can lead to different decisions. And so just one quick example that we'll show you before we move to operational boundaries as this is ExxonMobil, they're an oil and gas company. They do a lot of other things too. They've actually picked two different methods to report on. Now, normally you pick one, that's your main method, and you report on them. You don't mix and match them. But we just wanted to highlight here that the outcomes can be different based on the inventory method that you use. So, or the consolidation method, the organizational boundary. On an operated basis, you can see here that they've got these numbers, right? In 2016, 2022, 97 million metric tons of CO2e, the equivalent. That's on an operated basis. On an equity basis, where they have a financial interest, that number is 110, right? So they have a different type of an ownership structure that leads to different outcomes. We won't get into why here, but just know that that choice of boundary can matter. And some companies do actually calculate both and report on both, but the goal is to choose the one that makes the most sense for your business and to stick with that unless there's a good reason to do it differently. So I'd love to go into more on operational boundaries, but just know that's how you're setting the boundaries for which assets, which businesses are in or out, right? So now you've got sort of your consolidation method. The next step is to think about your operational boundary. And this is where those emission sources from within those units that are in your organizational boundary are coming from and how you're going to categorize those. So here's just a quick visual for how that might work. So think about those different groups that are in your organizational boundary. Then we're going to think about all those different sources of emissions that come from within those organizational units. So think about all these. It could be transportation, heat, business travel. From there, we have to categorize them as either direct or indirect. And Shivani showed an introduction to this, but basically, if it's direct, that means you own and control that source, right? You burn the fuel that leads to those emissions. Indirect are choices that you make, somebody else is doing the burning, if you will, but you're purchasing it somehow, or you're making decisions there. So those also fall under your inventory, but in a different way. So this idea of direct or indirect, we do that before we even talk about scopes. Because if you remember from the graphic that Shivani showed, those direct sources become your scope one. The indirect sources, depending on what they are and where they come from, become scope 2 or 3. So you have to understand that first. So just know, and again, this is a main takeaway, that idea of ownership or control is really what's important when you're talking about your operational boundary, not just the source. So what we can see here is there's a few sources of different types of emissions that you're probably going to encounter in your organization, or if you're working with clients, their organization. Let's say you have electricity for your lighting and machinery. Well, you might say, well, that's scope 2 because that's purchased. Well, what if you generate that on site? If you generate that on site and you own and control that, that's scope 1. Right? Same thing if you're doing business travel. If you have a company owned jet or fleet of vehicles, that's scope 1. If you're using commercial vehicles or you're flying commercially, that's scope 3. So that ownership piece is the first step, and that's critically important. And that's what we deal with when we look at the idea of operational boundary. So hopefully those two pieces are clear. Now, we don't often go into that different. You don't change your organizational boundary. Your operational boundaries may change, but those are the choices that you make first before we talk about the scopes. So here's just one example of how a company might pull those things together based on these operational boundaries that we just talked about. This is Suzuki. So for their organizations that are in their organizational boundary or their business units, we can just see here that upstream, they have certain scopes in their scope 3 that are an important part of their inventory. We see their scope 1, which are those direct emissions directly used by the company itself in their production. Scope 2 are those indirect emissions from their purchase of electricity and purchase of heat. And then some of their scope 3, which is downstream. So it's just a nice visual for how that might come together for one particular company. And when Juliet talks a bit later, she'll talk about some of those choices that they've made in their organization as well. Great. So to keep our quick flyover of the process, we're going to focus most of our time on the calculations, and that's what we're going to talk about now. So step 3 is all about identifying those sources and quantifying the emissions from sources, right? And again, these are sources that come from the assets and organizational pieces in your boundary, classified by whether they're direct or indirect. Well, then how do we calculate them? That's what we're going to talk about now. So again, sort of in our goal to sort of break some of the complexities into sort of what is the big picture, there's really 2 big questions that we're looking at when we look at calculating any type of emissions. First one is for any given activity. So let's call it business travel. Let's call it, production on a certain production line, for example, the fuel that we burn. The first question in our equation is going to answer how much greenhouse gas is produced and of which type. Because as we saw before, you might have CO2, carbon dioxide, you might have methane, you might have nitrous oxide. That's different from the carbon equivalent, which is more around the question of what is its climate impact. And in this case, on global warming. That's where that little E comes in, right? That's where those global warming potentials come in. So the equation that we're going to show you, it's in 4 parts, but it basically answers these 2 big questions. How much gas of which type? What is the impact in terms of its global warming? All right. So this is what that formula looks like at a very high level. Now, there are some ways if you do this, you might say, well, sometimes for scope 1, for example, we can actually just measure the emissions that we're emitting. True. But most companies don't do that. Most companies use these type of calculations. And this is really going to be important for scope 3, for example. So we use this kind of activity and emissions factor approach. So the first question of how much greenhouse gas is produced, take your activities, multiply that by what's called an emissions factor, right? That gives you that part of the question. And we'll walk through that. But then that's not enough because that just gives you the underlying gas. So from carbon dioxide, for example, that will give you the CO2. That will give you the nitrous oxide, for example, but that doesn't give you the CO2e, which we talked about. That's what we typically report. So for that, we have to go back to those global warming potentials, multiply that through, and that gets us to the end of our calculation. And the reporting that we do, we say in tons. We do that reporting for the most part in tons. That's really important because units really matter. Maybe sometimes we get a measurement in kilograms. We have to convert it to tons, for example. So there's a lot of pieces happening here where the units have to match up, and we're going to talk you through that a little bit as well. So again, take this kind of equation away. We're thinking about the activities, the emissions factors, and then we've got to scale it through to get to that equivalent, really to really understand its warming impact. Let's look first at this first part of that equation. So we have an activity data, which measures some sort of activity related to a specific source. We add that multiplier, conversion factor called an emissions factor. And just so you know, the answer to this comes out in its constituent greenhouse gases. So it might be CO2, it might be CH4, which is methane, but that's what we're getting here. Okay. So let's look at activities. The activities are going to vary and be very dependent on what type of underlying activity we're talking about and that source, those things that we collected in that operational phase, right? So this might be something like electricity use in kilowatt hours. It might be distance traveled in kilometers. It might be your gasoline use that comes in gallons or liters. And it might even be for some, especially some of your scope 3 categories, spend. It's hard to know kind of what's going on behind there. So you take spend and you can convert that into emissions as well. So these activity data sources, they can be very, very varied. They can be quite varied. Okay? And so really what you're looking for is the one that's most matched to your activity. Okay? And again, electricity use, distance travel, these are all different ways to measure your activities. But the activities don't tell you what the greenhouse gases from those activities are. For that, we need a way to convert that activity in whatever unit we have to some sort of a multiplier that says, well, this is then the greenhouse gas that comes from that and of the specific type. So for example, you might find kilograms of methane per liter of gasoline, right, to help you convert that if that's your unit. You might have kilograms of carbon dioxide per kilometer traveled. You might have pounds of nitrous oxide per gallon of fertilizer or liter of fertilizer. You might have kilograms of carbon dioxide per sheet of paper that you purchase, right? Or per dollar that you spend on paper. So these are important elements. So you can see here a few things. One, these don't come from one place. You kind of have to go and look for some of these. For energy related items, there's very good government sources. For things that you purchase, there are other types of sources. We won't get into all of that, but there are different ways to go find them. You have to match them to your activity. That's really important. You have to match them to your units, right, that you're using in your activities. They can change over time, right? Measurement gets better. If they change enough, we might have to think about recalculating. We'll get to that. But this emissions factor piece, right, there are hundreds of sources. There could be thousands of sources. The most important thing is to make sure that whatever activity you're measuring, you find the best emissions factor to help you convert that into those GHGs in a way that matter for your business. Right? And having them be as localized as possible, especially when you're talking about energy, is also really important. So these factors can be coming from lots and lots of different places. Now, when that happens, we actually do the math. Like the hard part's actually getting that information, right? Doing the math can be relatively straightforward as long as we've matched up the activity with the emissions factors. So what I want to do here is walk us very quickly, and I know I'm moving really quickly, but I want to walk us quickly through two types of calculations for this two calculations from this first part of the equation. Let's look at one, which is nitrogen fertilizer that we've used, right? That's in nitrous oxide. And then something around employee commuting, which we've gathered miles, right? So let's say we have 200 tons of fertilizer. Maybe if you have an online calculator, you can open that up. We won't do this as a poll, but if you want to just follow along. So let's say we have 200 tons of nitrogen fertilizer. And let's say that each of those tons has an emissions factor or generates approximately 0.005 tons of nitrous oxide. So we said we calculate these typically first in their underlying constituent gases, unless you have an equivalent metric for your emissions factor. In this case, it's tons of nitrous oxide. Then we need to get to the point where we say, well, how many tons of GHG emissions and of which type does that include? So if you've got your calculator going or you're good at doing this in your head, then you might know that this leads to 1 ton of nitrous oxide. That's the first part of the math that we're doing. So the emissions from that use of 200 tons of nitrogen fertilizer with this emissions factor would be 1 ton of nitrous oxide. So let's look quickly at the employee commuting. We have 1,250,000 miles. We have an emissions factor. These are made up, by the way, just sort of for the exercise to get nice round numbers. But let's say that we have 0.2 kilograms of CO2 for each of those miles. Okay. So we're going to multiply those through again. And if you do that on the page really quickly, I'll kind of do the reveal. What we get to is 250 tons of CO2. Now you might have 250,000, right, kilograms. right? But remember, when we do this process, we're converting to tons for the most part. So one of the really important things that you'll find when you do your GHG accounting is the units really matter. And it's very easy to make a mistake around those units, right? And that those units could be the emissions factor that we're using not matching. It could also just be in the conversion of something else besides tons, right, into tons. So always remember to check those units all the way across so that you can see that the math is working out. Right? So that was the first half of our equation. Like we said, we're going to get some activity, we're going to apply some emissions factor, we're going to come up with some total amount of greenhouse gas, right, in its constituent form. So my question now to you is, let's take those numbers. We have the 1 ton of nitrous oxide that we just calculated, and we have car trips or business travel that emitted about 250 tons of carbon dioxide. So the next question is, which of these do you think has the greater likely climate impact in terms of its warming? All else equal. Let's just look at that element of it. Is it that 1 ton of nitrous oxide, or is that 250 tons of carbon dioxide? So if we can launch that poll really quickly, just want to test your thinking on this concept here. So is the greater impact that fertilizer, 1 ton, or that car trip, those car trips, the 250 tons? What do you think? I see that we're getting some answers in. I'll give just a few more seconds for everybody to kind of think through this. This is a really critical concept when we're talking about GHG accounting. Great. All right. Great. So I see a bit of a mix. I'll give just a couple more seconds if anybody else wants to get their thoughts in here. I'm going to go ahead and end the poll. So most of you have said that fertilizer application, right, versus the car trip. And that is in fact true. Because remember, the last thing that we have to do, this is how we get it to an equivalent, that CO2e, which is really about that sort of warming impact, is higher for that 1 ton of nitrous oxide. If you remember correctly, you'd have to kind of remember back, that global warming potential was 273, right? And that's kind of per unit of carbon dioxide to get to that E that you see right there. Carbon dioxide's already in that form, so we just sort of carry that over. But it's really important to keep that piece in mind because we aren't done when we get to the end of the activity and the emissions factor. We do have to go ahead and calculate that on through to the equivalent because that's how we can compare different types of businesses, for example, where those greenhouse gases emitted might be very, very different. So remember that we have to kind of take this all the way through. We use that global warming potential that Shivani mentioned before as a multiplier for the outcomes here. We use the 100-year global warming potential. That's what's been sort of aligned on in terms of the GHG protocol. And then that gives us that equivalent piece here. And that's what we're calling climate impact. It's global warming. To do that, we go back to those numbers that we showed earlier. We really do need to convert those. Many of these are provided in ranges, but these are some of these 3 that you see here, carbon dioxide, methane, nitrous oxide. These are 3 of the most sort of common that we'll see. The numbers can change. We go back to sort of the latest IPCC numbers to use these, but that's sort of the set that we use. Companies should use them consistently, right? And if you do need to change them for whatever reason, if it really changes your outcomes of your inventory, then that might be one reason you consider recalculating, right? Which we'll talk about in a moment. So just remember to get to the end kind of successfully through all of these, we do that reporting in metric tons of carbon dioxide equivalent. So we can't skip any of these steps. And then most companies are also going to be reporting those constituent GHG. So the nitrous oxide, for example, that we converted into CO2e, we report that alongside. So as you can see, there's lots of places along here where we might stumble on our units. So it's really, really important to make sure that those are all matching up all the way through. All right, so that is the calculation process. And just one last thing to kind of get into that step 4, and we won't go into much detail on this, is that when we track and report over time, right, it's a moving target unless you have a base year. So setting your base year and understanding when things might have changed enough to be able to have to recalculate, that's really important. So just a few things to take away around tracking and reporting. You set a base year. There are some principles in the GHG protocol for when you do that, but you set a base year when you have good full inventory. You need a recalculation policy. So what if our operations change enough that those old numbers, that base year is no longer relevant, right? Acquisitions, big changes in methodology, right? You might need to recalculate. So having that in mind is important. Most companies improve their data over time. So for example, scope 3, you might go from using spend to actually having real activity data. If that changes your answer enough, you may want to actually think about recalculating as well. And then of course, if you're considering third-party validation, which is important, you need to plan for that when you look at how you calculate and measure all of those elements all along the way. So that's sort of a warp speed tour through the 4 steps of GHG accounting. But just remember, the calculations themselves aren't the whole thing. You really have to understand the concepts of the boundaries, and you really have to understand too, to make these meaningful, how you calculate, how you compare over time, right? Because these are long-term decisions that you make. So those are all important elements that you'll want to take. So with that, I will turn it back over to Shivani to talk a little bit around how we can help in the process or help you if you're thinking about this. And then we'll turn it over to Juliet as well.
Perfect. Great. Thank you so much, Lorinda. So just very, very quickly, how we can help you further in the journey of GHG accounting for you. We have our next masterclass coming up. It's on the 2nd and 3rd of December. Imagine this is what we could cover in a 1 hour and 15 minutes session. This is only the introductory level. There's so much more and so many more details to go into. How do you actually look at the operational boundaries? How do you calculate organizational boundaries? How do you put all of this together? How do you divide and classify the different scopes and the different activities, etc.? And how do you calculate all of that and put together in reporting and put that as part of the strategy of the organization? So if you're interested in kind of taking the next steps, join us for our GHG Accounting and Strategy Masterclass on 2nd and 3rd of December. It's a 10-hour session, and you get CPD credits for that, for your continuing education. And we do have some early bird discounts. So my colleague is going to kind of put the details of all of that later on the chat. So keep that in mind. And with that, I'm going to, and of course, keep sending us questions. And if you have any further questions as well, we are here. We're not going anywhere. You can always reach out to us and ask questions from us. With that, I'm going to hand it over to my colleague or ex-colleague and friend, Juliette Gaussem, who's going to take us through her kind of journey of GHG accounting at Netceed. Over to you, Juliette.
Thank you all. Very quickly introducing myself. So we know Shivani, we know each other from GRI quite a while ago now. But since then, I continued working in sustainability as the head of reporting for Signify, Philip Lighting, and now as a group head of sustainability for Netceed. And discussing with Shivani, we're like, okay, we did all these calculations and to provide a bit of a pragmatic feedback on everything that has been disclosed until then and answer any answer you might have. Just about Netceed, just very quickly, we are...
Sorry, Juliette, I have to interrupt you because the slides are coming as we can see the next slide, like it's not on the slideshow mode.
Okay. So let me just redo PowerPoint show, share. Now it's better?
It's loading. Yes, it is. Thank you.
So just to put everything in context, we are a retailer, a distributor. So we are not a manufacturer. So when we talk about GHG emissions, you will see that all of this, you can see that in the scope 1, 2, and 3, what the result at the end. But basically, we are a distribution of telecom equipment in 19 different countries. We have many, many, many entities, which is another challenge that I can touch upon in a minute. But just for you to have an idea, about 2,000 employees across the globe. Next slide, let me see. I think it's still good, right? So basically what you can see here is the final outcome, the ambition. So when I joined Netceed in 2024, we didn't have much in place. And my idea was really we need to have a climate strategy because as a company, you can't do really without today in light of the European regulations. So we want to have targets that are achievable and make sense, understanding the context in which we're living in, which is massive consequences of climate change. So what can company does? And this is where we decided to, okay, what is the first stepping stone before setting up targets? Is that you need to understand where you are starting with and really what is your GHG emissions as of today to understand where you need to go if you want to have targets. So for that, we looked at different organizations. And so the SBTI, the Science Based Target Initiative, was the one to define the pathway. But to calculate the GHG emissions, something that we have been discussing a lot until then, we look at the GHG Protocol. And the idea here is like really to look at the credible standards that can enable us to calculate our emissions and is recognized among peers and among experts as the framework to go. And as Lorinda explained, you have the scope 1, the scope 2, and the scope 3. So I'm not going to enter that in the details, but basically what you can see here is the most important emissions for us with the company cars, natural gas consumption when it comes to scope 1, scope 2, electricity consumption that we purchased and still purchase. And scope 3, you can see that it's about the purchased good of services. So as we are a retailer, where you have the most emissions in the goods that we resell, and these goods have been manufactured by our suppliers. So this is one you will see most of the emissions. Use of sold product, when you have in your house the decoder or the box, you use energy for that. And this little device has emissions related to it. And although this is not our product and this is not us producing it, this is still in our scoping. So this is really the value chain. And that is one of the challenges that I can touch upon a bit later on. But this one is also a massive impact for us in terms of emissions, transport good and business trip being also important categories that you have according to the GHG protocol. And so when we decided to define our roadmap, of course, you need to decide where you're standing first, right? So we looked at our carbon footprint and the base year was 2022. This is roughly how it looks like for the 2022. You can see that 99% of our emissions are in scope 3, the majority being use of sold product and purchased goods. And this is a final result. And I think all that has been presented so far is that how do you calculate that? And I want to take a very humble approach here. I did not calculate that. So I might join the next masterclass, by the way. But basically what we said is we do not have this expertise internally. I'm a single person in the company. So I work with a third-party provider, a company we've been working for 3 years now to help us calculate this. And we did that in a way also that we could have an extra verification of our data. So although all this data is not audited or validated by a third party, it has been done in conjunction with a third party. So I want to be very, honest here. We've used a third party provider to calculate our emissions, but we did provide all the data that we had in terms of activity, suppliers, employees. So we did an employee survey. So we collected all the raw data. We provided it to our provider and they applied the calculation that Lorinda showed in the previous slide with the emissions factors to come up to this aggregated result. And then it was our starting point. And I think I don't want to take too much time and explain, but the reporting is not the end of the journey, right? It's the beginning. So for us, we started with this data and then now we are able to understand where we stand. And this is from there that we look at the science-based target requirements to define targets. I'm not going to enter in this slide because it's not, it's a bit off topic. And we define our commitment and we have a decarbonization plan that we wanted to reduce. And then from there, we define different actions. So for instance, to reduce our scope 1 and scope 2, we looked at different actions that we can trigger. So the global fleet moving to electrical, trucks running on biofuel, electrifying and purchasing renewable electricity being the main triggers for us to decline. If you look at scope 3, one of the big challenge for the use of sole products is like, okay, we have these emissions, but we can't do much. So here we calculated based on what we expect to be the green transitions to greenification, let's say, of the grid in Europe. We will have a decrease by 2035, and the rest, what can we do? We are not in control with these emissions, but still we can do things. So we have defined an action plan here. But again, for the sake of time, I'm not entering too much in the details. And for the purchase good, what we decided to do is that we are engaging our suppliers, and we said, okay, if you calculate your emissions, and if you set yourself targets de facto, because we are all the suppliers of someone, that will reduce our scope 3 emissions. So it's a bit of a domino effect in a positive way here. So that's the approach that we took. And I think I can spend a bit more time here on the experience and not the challenges that we had that might be relevant for this crowd today. So we are calculating our emissions since 2022, and this is a baseline year. But since then, we had merger and acquisition. So we talked about boundary. What do you include? What do you exclude? So that was a big trigger for us. So for 2022, we decided to recalculate our emissions of 2022, including new companies and new entities in scope, to have a more accurate baseline when it is to set targets. Another challenge that I can share is like we are in 19 countries, and I think we have like 62 reporting entities. So collecting data from all of these people and all over the world, it's not easy. So with the more experience, the more you get to get better data. So I can imagine the 2022 footprint that has been made is good, but it was with a lot of estimation, and this is a reality of GHG emission in scope 3. The more you get and the more raw data you would get, the more refined your emission will be and what you are seeing, and then the closer to the reality, and generally it reduces your emissions. I don't know if that's clear, but we are very conservative making estimations because it's better to over-report than to under-report when it comes to GHG emissions. So that's the approach that we took, and it's okay as long as we are transparent, explaining where this data come from. That is something. And the next step for us is to have all of this data audited, so we are sure that, you know, what we communicate is close to the truth, and we can continue in our reduction pathway. So I think I want to stop here because I think it would be nice to have maybe some question and answer from the crowd. What do you think, Shivani and Lorinda?
Yeah, I think we have a few questions lined up over here, Juliet. So that's perfect. Unless there's anything more particular, we do have a couple of minutes for you if you want to.
Because I didn't want to spend too much time on the plan, like what we do next with it, because I think that might be for another session.
Yeah.
What we do want to do next, and it is what all you have explained, is that to do this calculation internally, because I think that's really when you really control the topic, then you can have it internally, but we do not have yet the systems to do that. So we are investing this year, we are transitioning to a tool, a reporting tool. And eventually, slowly but surely, we'll have more and more data. But in terms of maturity, Netceed is not there yet. And I think for me, it was important to share that, because that's okay not to calculate everything yourself yet, but you need to understand these calculations, of course. You need to understand the concept of the emission factor. You need to understand the GHG protocol, all of that. And in my previous company, we did have the capacity from one full person and the software to calculate with updated emission factors all of our carbon footprint. Eventually, this is where we will get, but in few years, in a couple of years, I would say. So just also in terms of transparency and feedback from a practitioner, I think that's important to say.
Juliet, could you just mention too, sort of how you, as sort of a leader here, think about where you're going to put your time, right? Because you could have a great inventory if you had unlimited time and resources to do it. So how do you think about sort of where you focus on building that maturity and where you focus on getting, let's say, better data?
So for us, well, first from your internal stakeholders, right? To get better data, people need to understand what it's for. So you need to work on that as a leader to get the right data from your activities. So you need to ensure that, and you need to have the level of details to say, well, that cannot be, like, you can't have X amount of transport. So you still need to get into the details as a leader. But for us, it's important to apply this materiality concept. Like, if it's only 5% of your total emission, then rather spend less time on that and have, for us, a very sound engagement plan with your supplier so they can get better data for you. Because for us, you could see that scope 3 is like 90 plus% of our emissions. So this concept of materiality can be applied anywhere, specifically here in a very detailed oriented topic, which is GHG accounting and inventory. Important to know where you need to focus first to get the best of your data. And then, of course, with the year of experience, you have also the historical data, so you can compare to. But the first year is important to have a good first image, capturing image, and then be okay with evolving positively.
Great. Thanks.
Wonderful. Thank you so much, Juliette. There are several questions, and I'm going to just kind of quickly moderate the questions over here. So I'm going to come back to both you and Lorinda when the right question is. So let's start with Lorinda. The first question is about, well, there are several questions about leased cars and company cars. So maybe I've clubbed them together. So maybe you can address a couple of those. First question, are the leased cars used by companies' sales force under scope 1 or 3?
So that depends. And that's why we don't talk first about scopes. We talk about the idea of operational boundaries. So the question actually depends on what your organizational boundary is and how those cars, in this case, are kind of owned and operated, right? So there are some cases where that same exact use may fall under scope 3, category 8, which is leased cars. There may be some where it falls under scope 1. So that's why it's really important on this one for leased cars, especially to understand what kind of lease it is, what your operating, what your organizational boundary is, and then some of the ways that the decisions are made around the operating of those cars. So I wish I could give you an easy answer, but all of those things matter. And that's why we spend our time even talking about those questions first before we even get to scopes, because they do make a difference.
Indeed. Related question about cars, but this is more about cars that are used by individual employees for their private and business purposes. Do they count under scope 1 emissions?
So if the company cars are sort of owned and controlled, the source of the use of those cars, the fuel burned, if we think about it that way, at its most sort of simple, is owned and controlled by the company. So let's say the fleet of cars is owned by the company, and the employees use those in their work, right? Then those would tend to fall under scope 1. How you separate out, if the question is, do we actually include the private use of those and the business use of those? If you're doing what Juliet said, which is you take a conservative approach, you sort of over-include in some cases. There's not a distinction made in the GHG protocol about whether that use is private or business, right? The use of those cars, if they fall under kind of that ownership and control of the company, should count in your scope 1 emission. So hopefully that answers that specific flavor of that question.
Indeed. Great. Thanks so much, Lorinda, for that. A question for you, Juliette, particularly about what you were talking about. What's causing the scope 2 emissions for you to go up since 2022 while scope 3 has come down drastically?
Wow, that's a very good question. So scope 1 and 2, comparatively year on year, similar, like really very few changes. We didn't, joined in 2024. So the actions that we are putting in place cannot be seen yet so it's like you consume more 1 year on another, you have more gas consumption, you close a site or you open another one, depending if your building is more energy efficient or another, that will cause the fluctuations. Let's say scope 3, drastic downsizing of scope 3 because of activity. So of course, the less you resell, the less product you have in your portfolio, and the less scope 3 emissions you would have and use phase as well. And that's why we took an approach to set the targets to make sense. We put the targets, intensive targets. So the target that we set for Scope 3 for the use of sold products, so at the end user, will be always related to the amount of revenue that we make. So like that, it makes sense. So although your Scope 3 emissions will decrease, it's not because it will decrease, or we will see the reductions according to the reduction of the revenue, and same with the increase. So that would be the reasoning of the fluctuations. I hope that by next year, we will have more Scope 2 and Scope 1 reductions due to actions because we see more electric vehicles in the fleet. We see more renewable energy sourcing, this kind of thing. So hopefully that will reduce a bit the Scope 1 and 2.
Wonderful. Thank you so much for sharing that, Juliet. Question for you, Lorinda. Who checks that the consolidation method selected is correct? Is there an audit on this?
That's a great question. I know that idea of the organizational boundary, especially when you start talking about things like all in or all out, can be a little bit confusing, or it makes people think about what they're actually saying. As part of a verification process, for example, looking at those organizational boundaries and whether or not they tend to make sense is something that can be looked at. But these are really choices that companies make, right? And so thinking about the methodology and the reason why that's the chosen concept or the chosen boundary, consolidation approach makes sense. It's not likely to be exactly the same as for your financial reporting, for example, but there are certain types of structures that lend themselves to different types of businesses. If you look quite different from that, quite different from your peers, it might be a bit strange, but it is something that could be part of an assurance process. But for the most part, those are the choices the companies make based on the structure of their business, and having the documentation and the methodology and even some of the implications, for example, to understand that internally is going to be really important. But there's no consolidation police per se, right, in terms of those boundaries, just like there's not necessarily in sustainability reporting either. But making good choices and saying why those choices are there, and some of the understanding the implications of that are really important.
Perfect. Great. Thank you so much, Lorinda. Another question, it was about 7 GHGs and whether that's an exhaustive list or an indicative list, and I can quickly take that. So 7 GHGs is what is also included in the GHG protocol, and that's an exhaustive list from that perspective because that's what the organizations include, that's what the organizations consolidate, and that's what it goes into their reporting. And it's also used for comparability. It's also, like I mentioned during the presentation as well, it's important to know which gases, although you're going to kind of make them into CO2e, CO2 equivalent, it is still important to know individually what those gases have been, how much of emissions come from each of those gases, so that you can actually think about the solutions from that point of view. So that's kind of the idea of it. Going back to other questions very quickly, and that's about primary and secondary data. Maybe Juliet, you could talk a little bit from the practical experience, because you did mention that in Scope 3 you had quite a lot of estimations that you've used. How do you deal with primary and secondary? What's the differentiation between the two types of data?
Ideally, you have primary data because this is like, let's say, take the example of Scope 3. So to calculate my Scope 3 emission of purchased goods and services, I need to understand how much emission it costs the manufacturer to produce a router, let's say. If the suppliers is mature enough to have the data of Scope 1, Scope 2, and Scope 3, and to be able to provide a detailed Scope 3 based on what we buy exactly and based on what the products consume, which implies to have a life cycle assessment. All of this would be the ideal scenario situations, and then you will have primary data for all different possible GHG emissions related to the production and to the use of one single product. In reality, this is very difficult to do that. So what we do is that we ask to our suppliers first if they have data. Some don't. So what we do is like we do an estimation, an average based on all our spend. We look at 70% of the spends of our suppliers. With the ones that provided data, we do a basically average and look at some calculations to have some sort of comparison. And then based on the revenue that we have towards those suppliers, we do a spend approach. And then we would calculate the eventual emissions related to the activities we have with this supplier. And this would be secondary data or estimations based on spend, for instance. Same for the categories that we would use as a proxy, what data you have and how can you estimate the emissions based on, there is different calculations method that could be used, but primary data, I would say, like, is really like the exact emissions as it has been calculated according to a method, and the secondary data would be really what you can get as a proxy for these estimations. And in reality, for scope 3, this is what most of the companies are using, although it's getting more and more, accurate and better over the years. Did I pass the test?
Yeah,
I was going to
absolutely.
add one
Thank
thing on that too, to come back to that tracking piece. So
you.
sometimes what happens is you're using spend data, and that's literally like I spent $50,000 on laptops, and I go to a database that has sort of an emissions factor by spend. You might get a dollar amount. Well, over time, when you get better data, you might find that that spend data way overestimates or way underestimates like your specific products that you buy, like Juliet said. So you try to get better data. But the other implication of that is you might find yourself at a point where, like, whoa, all those numbers we used all along, they look really different. And if we just start reporting new data and our numbers go way up or way down, that's not an indicator of anything real that's happened. We just changed our methodology. And that's a time when you might go back and say, oh, we've hit that threshold where it makes sense to actually recalculate and maybe set a new baseline or a base year based on that. So better data is great. Just know that sometimes you're going to end up at that point where that means it's going to trigger a recalculation, because you do want people to understand the changes in your data over time, and not just sort of artifacts of methodology. So that's the other piece of that piece as well to keep in mind.
Brilliant. Thank you so much, both of you. Another question for you, Lorinda, and it's about double counting. It's about asking about scope 3 and scope 1. So some companies' scope 1 is going to become other companies' scope 3. When they
Right.
include this, wouldn't that be double counting or overestimation of emissions? How do companies handle that?
So it depends on what you mean by double counting. So in the grand scheme of all the GHGs in the world, right, if we all kind of had perfect information, it would all balance out, right? You're going to have your scope 3, that's somebody else's scope 1, right? From an organizational perspective, we limit the double counting by being really clear on the scopes. But from an aggregate amount of GHG in the world, right, we've kind of, that might be somewhat double counted. But really the goal here is to say, within an organization's boundaries, how do we think about those scopes? Let's make sure that we're not double counting between what scope 2 and scope 3, for example, or scope 1 and scope 3. That's really kind of where that piece comes into play. And in scope 3, I mean, even when you read GHG protocol, there may be some double counting across those, because we're just trying to account for sort of the exhaustive set of decisions that companies make. That's why we can't leave off scope 3, even when maybe at an aggregate level, there's some risk that if you summed up everybody's emissions inventories, it comes up to a higher number than, if you were to measure the GHGs in the atmosphere at a given point in time. But it's all about decision making. And so that's the piece there. Most important thing is those organizational boundaries combined with your operational boundaries should help you limit your double counting, because you actually really know what's in there and where those belong.
Perfect. Thank you so much, Lorinda. We've been receiving some practical questions about recording being shared with the participants later on. So I just want to quickly say, once the session is over, we will, in the next few days, have this recording uploaded on our website, so you can have access to that as well. We've also been receiving multiple practical questions on our masterclasses and FSA credential certification as well. Please, for those questions, it would be best if you contact us separately, one-on-one at learn@earthacademyglobal.com. If my colleague can put that email address on the chat for everyone, please, that would be handy. Then you can contact us and we can address your practical questions about masterclasses. Here, we want to concentrate on questions related to the GHG part. So I'm going to take one more last question and then probably our time is over for today, but you can always reach out to us later on. So again, maybe back to you, Lorinda. When you compare CO2 equivalent of a company between the 2 years, let's say current year and the previous year, do you use the same conversion factor for the 2 years, or do you apply the previous year's conversion factor for previous year and the current conversion factor for the current year?
So that's interesting. You shouldn't mix and match those, right? I mean, there may be times when you have new conversion factors, new emissions factors, because data becomes better or whatever. So you apply them in the year, and they should be consistent from the same sources within that year. The second question, though, is if those factors have changed enough, just like the methodology, the source of data, if it's changed enough, it might trigger a need to go back and recalculate, right? Kind of applying the new ones to the old data. That's the recalculation thing. But for the most part, you kind of apply the new ones and you go forward from there, right? But again, keeping in mind that if you were using a completely different source and that changes the data, or the emissions factors are just much, much better now, and you hit that materiality threshold for recalculation, that's when you go apply the new ones to the old and then kind of have completely new recalculated. For the most part, those other methodology changes, though, you apply them and you go forward. Just don't mix and match. I mean, if they've updated, don't kind of mix and match. I mean, you really kind of want to keep that piece, just like with global warming potentials. You want to keep them sort of consistent within the year.
Brilliant. Thank you so much, Lorinda. Thanks so much, Juliet, for your presentation as well and answering the questions. Thank you, everyone, for all the questions, for your participation, for the engagement through polls as well. We tried to address as many questions as we could in the time that we have allocated for this. In case you have any pressing questions that are left, don't hesitate to contact us, email us, and we'll be very happy to address those. For now, thank you for your participation, and we'll see you soon in other places. Thank you.